If it's losing money, making it bigger is going to make it lose more money. And if you avoid paying those people, you're probably making the problem worse. You're not actually making the problem better.
I can see the whole wide world with these two eyes, and I can be whoever I want to be, 'cause it's my life.
Hi, thanks for joining us for another episode of Ask Spurrell CPA. Today as the Edmonton Business Consultant, we're talking about how paying on time actually helps you win. So again, as the Edmonton Business Consultant, we're talking about how paying on time actually helps you win at business. I have May here with me again. So May, how'd your first exam go for the CPA program?
It was extremely tough.
Yeah.
But working while studying actually helped.
Yeah.
Because it made me actually put the cases to an actual situation. So it helped me actually with my problem solving, which is great because you don't get that on the job experience and the actual terminology or the stuff that you're actually learning. When you actually put it together, it's a lot easier. But it was a tough one.
Cool. So how long after when you write the exam do they tell you the mark?
In about a week or 2 weeks.
Oh, okay. Cool. So the quote that we have here today, it's a Zig Ziglar quote. We're talking about paying on time, and it says, you can have everything in life that you want if you just give enough other people what they want. And the statistic that we have, 50% of all Canadian small businesses go out of business in 5 years. 29% of these failed businesses will list running out of cash as one of their primary reasons for failure, making running out of cash the second most common reason for business failure. And the story that we have here is, business owners, they think that by delaying or avoiding paying people is a necessary part of building a business. And so, May, what are the questions that these business owners should be asking?
Well, the first one should be, do business owners who are getting behind often not know their margins?
Yeah, so a lot of business owners who are getting behind, they don't know how much they're making. They don't know what their margins are. So they don't know for every job that they do, their costs are X percentage and their gross profit is Y percentage. Or for every person who walks to the restaurant door, they make on average this and the food costs are that and they make an average of this. They just don't know those margins. And they really don't know how to solve the problems because they don't know what the margins are.
Are these entrepreneurs normally thinking growth when they should shrink first?
Yeah, they're thinking, we need more. I need more jobs. I need more work. I need to sell more products. When it's really getting them in the hole. And so what they probably should be thinking is about, let's make it small. And the reason why they get a little bit smaller is now the business owner can do a larger percentage of that work. And now they can start to afford to pay their bills. And then they can figure out their margins so they can actually know what they're doing, know those numbers before they scale it. Because, you can't scale a fail. You can't, if it's losing money, making it bigger is going to make it lose more money. And if you avoid paying those people, you're probably making the problem worse. You're not actually making the problem better. So a lot of times, forcing yourself to pay that bill forces you to make decisions that, really, force you to know those numbers before proceeding, right? Because it makes you sure you know the numbers and you can pay the bills before you move on to the next step. So, paying those bills forces you to go through that exercise where if you let them pile up, you can avoid it.
Mm-hmm. Do business owners who are getting behind often have unsustainable overhead?
Yeah, that's the other thing. They don't know their numbers or they have this completely unsustainable overhead. And it doesn't matter, they could literally double their sales or triple their sales and they're still going to be losing more and more money. But they don't really truly understand that because they're avoiding paying these people. They're avoiding paying rent or they're, pushing off suppliers or, whatever they're doing. They're avoiding the problem, so they don't truly understand the problem, that it's likely the margins or it's likely they have unsustainable overhead.
So does these unsustainable overhead often mean you should lay someone off?
Yeah, so unsustainable overhead, there's very few things in most businesses that really drive overhead. You talk about your cost of sales is your revenue, and your cost of sales is your contractors or your supplies or the employees who actually do the work and your gross margin. And then you have all those overhead expenses. And there's a long list of things on those overhead expenses. Usually you have utilities and interest and bank charges, and those sort of things matter, but they don't matter that much. The things that matter the most is generally the physical space that you're in. So like the rent that you're in, or the mortgage payment for the space that the business operates out of. And then it's the administrative staff. And in a lot of businesses, that's really the only two numbers that they can play with to move the needle. And the problem with rent is usually you're locked in on like some sort of long-term contract. It's 5 years, 10 years, and maybe you can sublease it, maybe you can get out, but a lot of times, like contractually, you're stuck. And then your only move to make a big, meaningful impact on the overhead expense is the administrative staff. You go from, in a small business, and you go from 3 administrative staff to 2 administrative staff. I mean, you might have, cut your overhead percentage, by 15% in the whole business, whereas you could, cut all of your phone bills or your interest and bank charges in half, and it would make like a 1% difference on the overhead. So, a lot of times that's the only move that a lot of businesses have, is cutting those overhead expenses.
And why is this actually the ethical thing to do and better for the team long term?
So why it's the ethical thing to do is because you're thinking, hey, I don't want to lay this person off because I'm not a bad person, and I want to make sure this person has a job. But that's actually, it's kind of a short-sighted vision. It's not really an ethical thing to do, because you have to realize that if you're not paying people on time, you're keeping this person on. You're basically robbing Peter to pay Paul. You're not paying a supplier who worked hard too. You're not paying the taxes on everyone's RP remittances, and eventually no one is going to get paid in the business when CRA shuts everything down. So you think that it's the ethical thing to do, but in reality, you're making some real ethical blunders to do it. You're not paying other people just because it's that immediacy, because that person is close in front of you, and you have to tell them face to face that, hey, I got to lay you off. And it feels more real than letting some bills pile up from a third-party supplier, or letting some tax liabilities pay up. But long-term, it's worse for the team, because eventually you won't be able to pay anyone on the team because you continually paid that one person live beyond your means.
Now, does paying on time help you avoid unsustainable margins or overhead?
Yeah. So by forcing yourself to make these payments, you make them on time. It forces you to face the reality of if you can actually afford these people or not. Can you afford the people on your staff? Am I making enough at the job to hire people to do it for me? And it's okay to build sweat equity in terms of work that you do yourself, because you can put your own time in and not pay yourself if you want as a business owner. But it's not okay to hire other people to put work in and use their efforts as sweat equity. You have to pay them. You have to pay those employees, and you have to pay those suppliers. Long term, it will come crashing down. And by not paying them on time, it lets you avoid the reality of what the margins are of that situation, or what your overhead is, and you don't face the problem until often it can be too late.
How hard is it to come back if you let the debts pile up?
It can be almost impossible. I mean, 29% of businesses, with the failed businesses, they've run out of cash. So you let those debts pile up for a series of months. You're not just like a new business. You're a new business starting from, further back than the start line. You're not even starting from the start line. You're starting from further back. You're starting with one hand tied behind your back. So it is very difficult to come back if you ignore these issues. And the way you do it, you ignore it, is you delay payment. You think you're doing it right. You think it's part of building a business. You don't pay people on time, or you avoid paying people. But really, it's just letting you not face reality. And the key part is you just got to face the reality. And there are some lean times in business, but avoiding paying people is usually because you're avoiding the actual facts, and you're usually avoiding making the right decision as well.
Why is failing to pay taxes, and specifically payroll remittance, especially bad?
Yeah, so CRA has ultimate power. You are just not going to pay your taxes one day, and CRA will literally go into your bank account and freeze your account and take whatever money you have. And they're not going to ask for your permission if you ignore them long enough. They're just going to go and do it, and there's not a thing that you can do about it. And like payroll remittances are especially bad because CRA views these as, unlike taxes where it's easy to miss a projection and they give you a little bit of a grace period. We're talking about payroll taxes. This is money you should have withheld from someone's check. They view it as like a trust account. There is no way you should have spent it on something else. So you're going to get behind on something like that, and they're not going to give you 6 months or a year to rectify that situation. They're going to say you're going to rectify it now, and maybe they're going to give you 3 months. And by that time, you could be tens, if not hundreds of thousands of dollars in the hole, and it's impossible to come back from that in 3 months. And they are going to be ruthless in freezing those accounts.
What happens to team morale when employees see the business avoid obligations?
I think the team starts to see that the owner will avoid their obligations, and the team also then feels, well, it's okay for me to avoid my obligations. Maybe I'm not going to do the checklist. Maybe I'm not going to make the phone calls I was supposed to make. Maybe I'm not going to greet the customer the way you told me to greet the customer. Maybe I won't show up for my scheduled shifts. I mean, the business owner doesn't live up to their obligations. That sort of culture will permeate throughout the entire organization, and you can't just artificially try to block that off on the financial end and expect that won't bleed over into the operational end. The employees will sniff that out, and that will become the culture of your organization.
And will not paying someone almost always cost you more than it saves?
Yeah. So sometimes business owners are thinking, okay, I'm not going to pay this. I'm going to avoid paying this person. I'm going to complain about something, just be an overly difficult customer of theirs, so I can avoid paying someone, living up to my obligation. But the business world is smaller than what you think, and eventually, somewhere down the line, that person is going to know someone who's planning on doing business with you, and you're going to lose that deal because they don't think you're an ethical person. You didn't live up to your obligation. You promised to pay them, and you either blatantly just disregarded it or try to come up with some artificial reason about why it was okay not to pay someone. And it's going to save you money in the short term, and it's almost always going to cost you money in the long term because you're going to lose sales. You're going to lose deals. People aren't going to do business with you. They're not going to lend you money. They're not going to invest in you. They're not going to purchase your product or service because eventually, the people that you're targeting are going to have done business or known someone that you didn't. It happens, and it happens all the time. And although they think they're saving money, they almost invariably always lose more money than they save by not paying. So I think that's what we have here today. Thanks so much for tuning in. As always, please hit the like and subscribe button so we can continue to deliver you tips on how to beat the odds at business. And as always, we look forward to any comments that you have that you can leave them below so we can respond back and use your input for future videos. Thanks very much.